Hi there, welcome to Markets Tomorrow right here on 89, the Mumbai News Centre. I'm Varun Goel, and it was a fairly disappointing session for the market. Second day on the trot, and we closed lower, sub 8,500. Trying to defend 84.50 in the session. For the broader markets, also there was enough more pain, but there was a lot of stock-specific trades on the back of earnings that the market marked and reacted to. We'll talk about that and more over the course of the next 30 minutes. Also prepare our viewers for trade tomorrow. But before that, I also just want to mark in the voices we have lined up on the show today. Starting off with Manish Gunwani of ICICI Prudential AMC will be throwing more perspective on the fundamental side of things. Dharmesh Mehta of Axis Capital will talk about the new listing on the block as well as the potential of the markets from these levels. Mitesh Thakkar will will be preparing our viewers with trading strategies for tomorrow's session. And we have Varun Goel, Vice President Fund Manager, PMS, Motilal, Oswal, AMC, talking about his high conviction ideas as well. The big story and the big reaction that the market got on the back of the yuan devaluation brought about a reversal in sentiment. So we started off actually decent, holding on to 8,500, but then cracked below the 8,500 level. Found some support at 84.50 odd. As you can see, it was a sliding graph, and one where there was a fair amount of intraday volatility. Aside of that, you had a lot of stock-specific trades that did not pan out too well for the market. On the index itself, aside of IT, most of the index heavyweights were under pressure. You had Tata Steel, which was down 5%. The commodity basket was particularly vulnerable. Hindalco was down as well. So all the index commodity names were under pressure. Coal India was down 3.5% too. But you also had financials which came under selling pressure today. So you had SBI on the back of disappointing earnings down 5%. There was ICICI Bank, Bank of Baroda, Yes Bank. That, of course, led the Bank Nifty also to close in lower. But aside of that, you had a BPCL, a Tata Motors, which gave way. Asian Paints was weaker. Some of the consumer names as well. HUL lost ground in the session. ONGC lost ground. So some of the index heavyweights put pressure on the market. Like I said, the only ones that held out, Infosys, Tech Mahindra, TCS, and add to that Bosch as well, where numbers surprised the street, despite it being an expensive stock, closed higher 2%. And Z Entertainment as well, after Mr. Subhash Chandra spoke to ET Now exclusively yesterday, talking about the potential of ad revenue growth looking only stronger for the broadcast business. You had Z Entertainment close up about 1%, bucking the trend of the overall market. Let's throw open the house for questions with both our guests. And Varun, I'll start off with you. There's so much happening, in terms of macro variables with the yuan devaluation, kind of reversing sentiment in intraday trade, and also on domestic turf, reforms not being executed as was the plan initially. How much do you think can this peg the market back in terms of index levels from here? How much more downside do you see to the markets because of local and global factors?
Well, it's always tough to look at markets from a very short-term perspective. A 5 to 10% kind of movement in the market is always possible. But I think markets would do well to focus on names which are delivering good earnings growth. Despite all the pessimism, we have seen quite a few sectors like consumers, auto, pharma. They've really come up with good set of earnings. And this whole commodity price decline is leading to expansion in margins. So I think irrespective of how the macro developments play out, irrespective of how some of the reform measures are playing out, there is a certain uptick as far as urban consumption is concerned, and our portfolios are really geared to benefit out of that.
Okay, fair enough. So you have hedged yourself well. Mitesh, I'll come to you. And your call on the index as also the Bank Nifty. Do you see more downside in the way we've closed today?
See, I think on the index, technically we are at support levels of 8450. That is where from last time we bounced back on the 4th of August. And I think there are multiple support levels, but the tide has clearly turned on the downside. I think, it's in the short term, I think it's showing signals of weakness. So I think if 8450, 8420 gives away, then I think July lows of 8320 also should be tested, and not only tested, possibly broken. So this 30-point range in that sense is very important. The other one is Bank Nifty, which is showing now some signs of weakness, but again, like the Nifty, is trading close to support levels of 18,500. If it starts breaking below 18,500, that could be an early indicator of the Nifty breaking down. Then we would look at possible levels of 18,200 on the Bank Nifty, and consecutively, I think 8320 being tested on the Nifty itself.
In individual numbers, we spoke about key earnings. On the index first, Bosch came out with a set of numbers that helped the market, helped the stock. It closed higher. But SBI, on the other hand, there was a fair amount of pressure on the asset quality front, particularly with the rise in slippages. The market was pretty disappointed with earnings. Even on the bottom line, that big outperformance was only on account of lower provisioning that the bank did this quarter, which was much lower on a quarter-on-quarter basis. The net interest income growth was much below expectations, and the disappointment really came in on the loan growth side, which was below industry average at 6.8%. I'll come to you for a fundamental view, Varun, but first, technically, given the divergent moves of both these stocks, Bosch and SBI, Mitesh, on the charts?
See, State Bank of India clearly, after the numbers fell strongly and at least in the short term kind of violated the up move it was going through. Now I think 274 will be a tough level for the stock to cross, and very likely that we will revisit support levels of 250 to about 253 on the downside. Bosch, on the other hand, appears to be a stock which has completed a correction, now is breaking out on the upside. I think it should retest the earlier as of 27,400 to about 27,670. I think that's the target area. That's where I would advise taking profits.
Okay, Varun, your call on SBI, because, if you look at portfolios, both global as well as local, and look at the exposure that funds have to banks, you have the large cap index banks in most portfolios, the likes of HDFC Bank, Axis Bank, Kotak Bank, and then from the PSU lot, you have a safe bet in SBI. Do you think that would continue, that these numbers would not really be an eyesore and perhaps might be seen as a blip in a consistent performer from the PSU lot?
I think as far as PSU banking space is concerned, one has to be really, pick and choose in terms of what stocks one is buying. There is definitely still a lot of pressure, a lot of concerns on asset quality. I think there are few names, which have better managements who have, tried to do the cleaning, and they're probably towards the final stages of that cleaning up of the balance sheet. So I think going forward, incrementally, I think the pain should reduce. However, I think a big bet which most market participants took was there's no expectation of a very rapid reduction in interest rates, and bond portfolio gains were expected, which I don't think is going to pan out as quickly as most people expected. So it's going to be a long haul. I don't think we are going to see a significant improvement in asset quality and credit growth. Remember, we are operating in an environment where nominal GDP growth is below 10%. So in that environment, bank credit growth, especially for large banks which are focused towards infrastructure sectors, is going to be extremely tricky. So one needs to be cautious on the whole PSU banking space.
Okay, cautious on the whole PSU banking space. From the broader markets, one set of earnings that comes to mind is Apollo Tyres. Their consolidated PAT may have been higher due to extraordinaries and, of course, a decent margin performance at the operational level. But their consolidated sales were down 13%. Add to that, there's, of course, also all that concern with the devaluation story of the yuan, that there could be excessive dumping of, tyres in the Indian local market, which would put pressure further for domestic tyre makers. And Varun, I'll come to you on that, because it was almost a double whammy for Apollo Tyres because their earnings disappointed, and for the entire tyre pack in the session today. Varun, that question is for you.
Yeah, so I think we haven't seen really the last of yuan depreciation. I think this is the first round of depreciation, considering the significant weakness in Chinese economy and the fact that the global trade volumes have been extremely muted. I would expect further depreciation in Chinese currency in the times to come. Therefore, those commodities which are dependent on or which are prone to risk from Chinese dumping might be going through a rough patch. We as a fund house, of course, stay away from global cyclicals, so we don't have any exposure as far as the metal space is concerned. As far as other segments of the market is concerned, one needs to be really, really careful in terms of the price, competitiveness and the brand value of the companies that they're really investing in.
Okay, one more star in the session today, and this one was really the star. I mean, Syngene International, the research arm for Biocon, got listed and got a fairly handsome premium from the market. Issue price of 250 got listed at 295 and closed the day well above 300. Varun, your quick comment over here. The research business world over has been drawing a lot of interest. So, Syngene is not an exception to that. And given the scarcity premium, there is perhaps pent-up demand as well for a stock like this?
Well, we would think is that it is slightly difficult to, to take a longer-term call on companies in the research and contract manufacturing space, especially on the research side, because there is no predictability of cash flows. There is no predictability of how the top line and the bottom line is going to play out, over a longish period of time. So while it's possible to look at the pipeline in the short term and say what will be the profits in the short term, but longer-term predictability is extremely difficult. And since we find, that those projections are difficult, we like to stay away from the space.
Okay, fair enough. Point taken. A word of caution coming in there from Varun on this business, which the market, of course, has fancied. Day one of listing has been very encouraging for Syngene International. In the meantime, we'll take a break. Lots more to talk about and prepare our viewers for trade tomorrow. But as we head into that quick break, here are Manish Gunwani of ICICI Prudential AMC. His take on the markets and earnings.
The focus is on micro in a sense, because there are no extreme valuations in the market. So I guess what's happening is the market is looking at execution, is looking at management commentary, and correspondingly either rewarding or punishing the stocks, as you said. So a lot of cyclical sectors have built in certain hope of a revival. And the revival may be stronger than what is built in, or it might be weaker than what is built in. If you're looking at sectors like banks and capital goods, the broad-based capex cycle as of now still seems muted, because I think it's again a mix of moving parts. So my sense is something like urban infra, road, rail, defense will do well, but at the same time, you have these global sectors which are a big part of the capex, the metals, the oil and gas.
Welcome back. You're still watching Markets Tomorrow right here on 18 now. And in key data points to watch out for in tomorrow's session, of course, we'll be discussing the industrial production numbers for India and the CPI numbers as well tomorrow morning when we open trade, as those numbers will be out by then. But also keep an eye out, towards what's happening in the rest of the region. You have China's industrial production for July coming out, and given the yuan's devaluation, remember these would be an important set of numbers. Not just on domestic turf, but on the export side also. China is witnessing a bit of a step back in growth. Their last reported export numbers were disappointing. Domestic growth is also not picking up very well. In fact, most believe that the actual growth numbers are much lower than the 7% that the agencies and government officials in China are putting out. Part of the market believes that that's why the Chinese market has been in a bit of a limbo in the last few weeks. You have Japan's industrial production also coming out, and the EU industrial production will also be key, because there are signs of life in the European region which are coming by, reflecting that economic recovery is well underway in the region. Back home, we're also going to be looking at key earnings to watch out for. Among those would be Coal India, Ashok Leyland. Remember, Ashok Leyland coming out with a strong set of numbers would be a key indicator that we could be on the brink of a turn in the CV cycle, which would then corroborate that the economy is seeing a revival. Their sales numbers over the last couple of months have been very encouraging. Even the last reported numbers for July were very encouraging. So that's a set of numbers that you need to keep your eyes out for, Ashok Leyland, that is. And then you have some mid-tier banks like City Union Bank, Dhanlakshmi Bank, which is going to be coming out with numbers. You also have Natco Pharma, which has been a key performer. That company will be announcing its numbers. Oil India, Bank of Maharashtra, as well as Voltas will be some other key liquid stocks, companies which will be coming out with their earnings, which the market will be watching out for. And Varun, I'll come to you on that. Ashok Leyland, do you think that this one could be the surprise from the auto sector, which the market has, not rewarded completely? The stock has done really well so far into the year, but do you think there's more to come in the hope that the CV cycle will pick up, and strongly so from here on?
Well, I think there has been a definite revival as far as the CV cycle is concerned in the last 12 months compared to what the numbers were just a year before that. So there has been a revival. Of course, it has not been as sharp as what most people were expecting. Our own sense is that as the government continues to pour a lot of money to revive the capex cycle, as the debottlenecking of projects happen, we are going to see some kind of a revival happening in the CV space. So I think volume growth incrementally for MHCVs and LCVs should improve from the numbers that we have seen in the last few months. And overall, I would think the sector looks promising from a medium-term perspective.
Do you think Coal India will also hold out its promise? The stock has done well. It's an outperformer in the metals and mining pack. The business model is favored by investors. But in terms of pure numbers, do you expect an exciting quarter with an 8% sales growth and near 5% bottom line growth?
Well, I think government has done a very good job in terms of debottlenecking a lot of mining projects. They are definitely making all out efforts to make sure that transportation to mines increases. They're taking efforts to make sure that mines which are not functional start producing. But I think a key risk in all commodity companies is that one has to look at the end price of the commodity, be it coal, be it iron ore, be it crude. So people who are dependent on the final commodity price, I believe there is a lot of risk because commodity prices have shown no sign of bottoming out and we don't know where they're going to end. So we would typically tend to stay away from commodity players.
Two more numbers where the market will be keeping a close eye would be Aurobindo Pharma and Cadila Healthcare. You're looking at a very strong quarter from Cadila Healthcare, 20% sales growth, potentially 50% growth in profits. Even for Aurobindo Pharma, while net profit might be a bit muted, you're looking at close to 17-20% sales growth. Varun, on your radar as well, these two names?
Well, I would say generally, as far as the pharma space is concerned, we believe that that is an area which, where we're going to see significant amount of growth outperformance in the next few quarters, considering the fact that the domestic sectors have been facing some kind of pressure. I know those companies which are geared towards a healthy export market in US and Europe and Japan, would tend to show good growth. Also, I think, while the rupee has been downward biased for last few quarters, and that should also help the earnings of some of these companies. So overall, our outlook for the pharma space remains quite positive.
Voltas and Mitesh, come to you on this one. We've seen a decent run, of course, a seasonal business, so to speak, but we're seeing a 7% growth in sales, expected that is, and 10% growth in profits. Technically, however, how are you looking at Voltas?
See, I think Voltas has been going through some kind of correction. I think now very close to, support levels of 299 to about 295 on the downside. So it's about another 3-4% kind of cut which can happen. It's also oversold, but it needs to give some kind of reversal, and that will only happen about 315. So I think I would be watching the reaction around 299, 295 very closely. In case we start breaking below that, I think look at possibility of 275 being tested over here, or otherwise I think in case we start getting past 315, I think it could retest the recent highs of 345.
Mitesh, I would want to discuss some of the other names as well. So Ashok Leyland, which has been a great performer this year, the year-to-date chart for Ashok Leyland will just come up for our viewers, and also the 3-month chart. And Coal India, again, a stock that's been fancied by the market this year.
Coal India recently has gone into correction, but now I think 390, 385, if that levels can hold, I think the stock will give a reversal. So from a trading point of view, I would be possibly exploring this one with targets of around 415, 420 on the upside. Ashok Leyland, I think, we've been recommending the stock for last few weeks or a couple of weeks back, but at these levels, I think it's prudent to take profits. I think extremely overbought, very close to, showing signs of tiredness at higher levels. I think anything around 88, 90 is an excellent level to take profits over.
Okay, fair enough. And just so that's Ashok Leyland's performance this year, close to 70%, and Coal India has also done fairly well for itself. But Voltas, seasonal business, very quickly, Varun, what's your call?
Well, I think consumer durables as a space would show extremely high growth in the next few years. As the purchasing power of people increases, there is a lot more consumer finance which is available. So we believe the whole segment should see a lot of growth. Of course, in the short term, things have been muted. This time, of course, monsoon rains have been quite good and the summer was short. And to that effect, some of the sales of various companies in the sector have been impacted. But we believe the longer term growth trajectory is very much intact, and therefore we would have a positive bias on this space.
Gentlemen, stay on with us. This year as well, Voltas, despite the seasonality element in the business, has done 26%. It's a liquid stock, well tracked by the market. So let's see what the numbers have in store. A 9% move over the last 3 months, quarter on quarter, that is. Avan Dabash joins in with a list of stocks to watch out for in tomorrow's session. Avan, what's on your list?
Well, Tanveer, can't ignore today's blockbuster listing. That's Syngene. In fact, it listed at a good 295 while the issue price was close to 250. And in fact, Motilal Oswal is pretty upbeat here. They've initiated coverage with a target price of 350. Remember, it is the only research company to be listed in India, and the IPO proceeds, as per Kiran Mazumdar-Shaw's commentary, it will be used towards their R&D needs for Biocon in particular. The other one is in the pharma space as well, and that's Cipla. It will be delivering its numbers later this week, and dealers indicate that this is a strong buy ahead of its earnings. Not just that, there was pretty positive news in the session today that they announced a new respiratory inhaler by the name of Synchro Breathe, which will be launched fairly soon, and that's going to be a major positive development for the company.
Thanks, Avan, for that list. 2 stocks to watch out for. Syngene, the new kid on the block, and one that the market has given a thumbs up to on the first day of listing. And then Cipla, dealers recommending buying ahead of results. Varun, your high conviction ideas for the benefit of our viewers?
Well, we believe that four-wheeler auto space continues to do quite well. We look at the volume growth numbers in the month of July, extremely promising, and there are early signs of revival in urban demand. So we'll definitely look at companies in that space. A lot of consumer companies came up with good earnings growth because of the fact that there is a very significant commodity price correction which has taken place, and most of these companies have retained the benefit of that. So these are the 2 sectors we would look at in a very positive way.
Okay, and Mitesh, what would be your trading ideas for tomorrow?
From a short-term point of view, I would recommend a buy on Ajanta Pharma with a stop below 1678. Possible targets of 1780 on the upside would be tested. This one stock which in weakness has closed on fresh highs, while Shriram Transport Finance has had some kind of a technical breakdown on charts, so that's a sell with a stop at 891 for targets of around 840.
Gentlemen, thanks very much for joining us today and giving us your perspective on the markets, your insights, as well as sharing your trading ideas, your high conviction ideas for the benefit of our viewers so that they can approach trade more wisely in tomorrow's session. That's time out on markets tomorrow, but we leave our viewers with some more opinion. Dharmesh Mehta of Axis Capital talks about his market outlook and why he considers Syngene a long-term bet.
We'll be watching on the monsoon front because that will be key definite indicator how the interest rates are going to behave in this coming few months. Markets may go down if suddenly the monsoon gets worse from here, and if globally something goes wrong and the oil keeps on spiking up the way it spiked yesterday. Really still the interest is there in India, but it's a cautious approach rather than a very over-aggressive approach. I think the long term this can be a very good investment, and you've seen that there's enough left on the table for the IPO investors to make money, and now going forward, depending on the growth prospects what they have been talking about, if they deliver on that, I think there will be good returns for the investors to make even from here. Great timing, great segment, and great business model with fabulous management. So all put together, I think so it's a great win.